Welcome, my dear friends. Welcome, investors. Welcome, traders. Anybody who's interested in making money as a side income, maybe even as a full-time income. Really, binary options can give you the flexibility to do it all. Anyways, today we're going to continue with me, Morpheus, your friendly host, who's going to give you the most of the red pill, the truth about trading by the book. The rules that govern this system are not magical. I prove to you guys day in and day out with these videos. You can take a look in the back. The graph is live. We are live right now. If you click on pocket option link that's below, you're going to get the same graph. You're going to look at exactly the same thing that I do. It's not something that's tailored, and once again, I'm going to be proving to you that market is not chaos. Chats are open. My man Henry is in the house, and my boy Donald. These guys are no longer just my students. They're actually my good buddies, my good friends now, because they reached out to me just like you can as well on Telegram channel that's also listed below. We're going to be posting a whole bunch of interesting things there, certain screenshots. We encourage you to touch base there as well, to ask questions, and me personally, will answer them to you. There's definitely, if you want to, if you're not satisfied with your current job where you're maybe tied to a specific spot, instead of being the citizen of the world, you're able to continue to make money no matter where you are in the world, as long as we remember a very important factor, that this is something that needs to factor in time. Yes, binary option gives you crazy profit potential, but there's a little bit more to that. That's why I'm doing these videos. That's why I'm presenting you with this information, so that you're able to understand what you can ask from this instrument. And this is something that we've done a couple of days ago in one of the videos. What kind of factors move the price? Let's go back. Let's go here already. So what moves the price, right? The supply and demand principles. What is the price action? Price action technically is kind of reference to how quickly we as consumers can impact the value of something, a good or service, right? If we're talking about, jumping at buying, stocks of Apple, because there was an announcement released that there's a revolutionary way to apply artificial intelligence in something, and everybody jumps and buys Apple stocks. Well, guess what? You were affecting the supply becomes lower, the demand is higher, obviously the price will go up. But if at that moment somebody comes on the airways and says, hey, you know what, Apple phones are exploding, kind of like with Samsung it happened, obviously the stock is going to go down because, obviously that's not really a good thing. Lawsuits and everything like that. Anyways, so let's see. Today we're going to be, we're going to be on for a while. Hopefully, it's not just my peeps, Donald and Henry, that are going to be in here. Ask a question. I don't know. What color my hair is. Or I don't know, what is my favorite car, or anything maybe about actually binary option topic in terms of price action, the reasons, and things like that, money management, whatever it is that's on your mind about side income, that's about improving your stability. Everybody's kind of maybe comes across this instrument, but they also maybe are afraid to give this a go. Actually, with Pocket, yesterday, we did look at tournaments. It was going to load. My internet is being goofy sometimes a little bit, all right? But nevertheless, all right, we've shown you that you are able to win money every single day, risk-free, right? So you don't need to buy. That's a free participation. First participation is free. So you participate, you lose, it's okay, just wait for the next day. You participate again, you lose, it's okay, wait for the next day. And I shown you yesterday how to win a tournament, right? You can take a look at the previous video. It is posted on the YouTube channel. It is posted on Twitch. We're looking to broaden to different platforms as well, so stay with us. It's about to get more and more exciting. More and more people are watching. More and more people are contacting me in Telegram. More and more people are trading one-on-one, so at some point we're still going to actually build our own VIP program where I'm going to make sure that you guys are taken care of. I'll even be able to insure your trading against losses, right? So I put my money, my money where my mouth is, so to speak. So we are able to discuss this one-on-one if you guys ever feel the need for it. All right, so today we're still going to be taking a look at euro dollar, the real market, because today, in approximately 4 minutes from now, we have an awesome, kind of like a culminary, I don't know, it's kind of like a result of all of the other macro statistics, the CPI, the PMIs, there's a whole bunch of macros that an unemployment stats, all of this goes into understanding how good the economy is doing, and then the central bank raises or lowers interest rates depending on if they want to jumpstart the economy, stimulate the buying, the selling, the borrowing money, and spending it. Right, they're going to lower interest rates, but if if the inflation rises too fast, they're going to raise interest rates, which means that there's going to be a constricting of the economy from within, but it's also going to attract foreign investors into buying your currency. So this is kind of important. Hold on. So just bear with me. If you borrow money from the bank, you're not going to borrow and stuff it in your mattress because you pay interest. You usually borrow for something. So when you spend that money, there tends to be a little, kind of like a reaction to this, right? So you spend it on some businesses, on some services, on some goods. When you do that, when you spend money, there is a how should I say, so you're affecting the supply and demand principles. You're increasing the demand, the supply or for that good or service, drops, and the value for this goes up. Right? This is kind of important. So we're going to be, looking at the result of all of these purchases, the spending, and what we're seeing is that previous month. Right, this is a forex calendar. This is a schedule when what country releases a particular statistic. Right, so they're saying that. All right, so let's see. The previous was a drop. Right, 265. It was dropped to 265. Now 265 is forecasted to 240, and it was 240 right now. The 240 is the forecasted to be lower still, and that is something that, well, not really painting a good picture. Right, it's not painting a good picture for the economy of Eurozone, right? So we need to understand that, in Eurozone, maybe because of this whole geopolitical thing with Russia and sanctions and limiting the amount of money, or rather, the amount of resources that Europe receives, right? And the cheap gas, essentially from Russia. And Germany is like the most industrial kind of country in the Eurozone. And it's kind of, I don't know if I read it correctly, but I think that like Mercedes-Benz has actually left Germany because it's not profitable to do business there. So I think that they actually, their central office is no longer there. But anyways, all right, so wait a second. What do we got here? We got 50 seconds. All right, so 50 seconds. So what are we expecting? We're expecting a spike. Do I know which direction the spike will go? Absolutely not. I have no idea where the spike is going to go, but I do know that after a spike, there tends to be what? Donald and Henry know there tends to be a retracement. Now, several times already I've shown you this, so this shouldn't be a surprise. But yeah, in about 20 seconds, right, we're going to see a little bit of jerkier motion right now because certain banks might be throwing money into a different direction to close certain stop-loss positions to free up some volume to purchase a particular, more into a particular direction. So 5, 4, 3, 2, 1, and where it is, where is it? Where? Oh, maybe it's not really as aggressive. I don't know if... wait a second. Now, are we looking at the same thing? There we go, there we go, there we go. Alright, so there we go. We're opening for a retracement. Maybe this information was pending a little bit, and now people understand that it's not really good. So we're going to go. It's a timer, right? I've set a timer for for 1 minute. So when so 60 seconds from this particular position, there should be. It looks like I'm gonna win, right? Usually reaction is a little bit more immediate, but yeah, it came out to be lower. It's exactly as expected. So. I'm not really sure why it went up, truth be told. Maybe certain people think that it's a good thing, right? Certainly people within Eurozone might think that it's a good thing because they're able to borrow money from the bank at a much cheaper, at a much lower interest rate and thus make their money, I'm sorry, pay back at a more, lucrative terms, I guess, in more favorable terms. But yeah, that's exactly, it's an unusual thing actually, truth be told, because I mean, depending orders is not something that we would be able to engage in this kind of scenario, right? So if I opened a call and a put position at the same time for like a 3 pip difference, the minimum time is 1 minute. So what would have happened is that it would have activated one position, went up to here, and then it actually went all the way down. It's almost like a 200% retracement. And it closed down here, so it actually would have, well, I don't know, actually, yeah, one would have been a losing one, the other one would have been a winning one, but, anyways, I did show you how to use pending trades, by asset, for example, and this is something that, I'm still loading here. Alright, something that we are able to maybe see in action tomorrow. Tomorrow I am going to try it with the NFP, right? So around this time, around this time we are going to start the tomorrow stream, and tomorrow we're going to see even bigger move than this. But we got the move, like, let's see, 1434 thing, right? But in actuality, it was what, 22 pips, right? 34 minus 12, yeah, 22 pips. So it's big in comparison to the previous moves, right? But the pip, it's the fourth digit after the decimal, right? So in this case, it's 4. The one after it's called pipette. All right, so the pip, it's the kind of like deciding factor of how much money you're making, right? So when usually somebody opens a position with like Forex in the real market for like a particular stop loss and take profit, they're calculating how many pips this could move. Right, so in this case, we're looking at 22 pips. So 220, or maybe like $200 to $220 worth of profit in this particular move right here with one standard lot. Okay, so I mean that's essentially it. So we need to understand that the European government, or European Union, the Central Bank of Europe, is lowering interest rates for quite a long time. Look, it was 360. Let's take a look more. All right, so whoa, yowza. All right, so it was at some point at 425 or 450. Right, so they kept it at 450 for a while. This was in January, beginning of 24. All right, and oh yeah, will we see, yeah, certain like years and or monthly, right? October, November, December, right? Then January, February, March, right? So we're skipping over a month, I guess, but there it is. It was at 450, and starting June 6 of the 24, right? They started to lower it, right? A little bit, and then they lowered it some more. They lowered it some more. They lowered it some more, and they keep lowering it because maybe people in Eurozone are not very comfortable at spending their money. So they're if nobody's spending money, it means that businesses suffer. Imagine you being I don't know, imagine you being a bakery owner and you have 5 chefs. And at the peak of your business, everything was going great. These chefs were getting paid salaries. The goods were flying off your shelves. You were making money as a business owner. But now imagine that now people are not coming in, they're not treating themselves to I don't know, to your French pastries or something. And basically, you're not able to sustain 5 salaries, right? So, the 2 people can handle a job of 5 based on demand. But if the demand drops, obviously you're not going to put out the same amount of stuff. Your supply is going to drop as well. But in this case, you might have to let go 3 of your 5 chefs. Say, sorry, I can't really pay your salary at the moment. Goodbye. And at that point, these guys go home and they tell their wives. They're like, dude, actually, I don't know why you would call your wife dude, but maybe it's somewhere, where that's allowed. Anyway, so, you'd say, hey, the times are tough. We're not really going to be buying the new patio furniture because I'm no longer employed. The workers at a patio furniture factory will see a decrease in demand as well, and essentially there's going to be the same kind of repetitive story across the whole country. So one of the ways that maybe the central bank can impact this, they can lower interest rates, right? And people can refinance their houses at a better rate and free up some money. Or, if they say, oh man, I know, listen, my job is, like me, I'm working, independently, and right now would be a great actual opportunity to go and buy a new car or remodel the house because the interest rates are so low. If you're comfortable in your money, and that might, spur you into borrowing money and starting your own business, for example, right? So if you, this is something that does take money, time and money, but nevertheless, if you are fired, right, you can either go into a depression, or you can go, I don't know, not do anything, or you can seize that opportunity if you were smart with your money and you have a little bit of a savings account. Just so you're not going to go buy a car, buy a brand new Mustang or something. So I don't know, I don't really like Mustangs. But anyway, so you might think about, hey, you know what, right now there are, certain incentives maybe that I can borrow some money and, I don't know, start my own lawn mowing business. Right, so this is exactly what what we're seeing here, an attempt from the central bank to encourage people to go and borrow, and essentially, the end result of borrowing money is to spend it. All right, right now, in about 7 minutes, we have unemployment claims. It's also going to be in the euro dollar. The thing is that I would caution you, not everything that has a red folder, right? And actually, we filtered out, the medium, low, and like really low impacted events, right? But we have a whole bunch of them, right? And so today is Thursday, there we go. So we are looking at trade balance and the same thing when unemployment claims are released. We're also going to have Canadian statistic trade balance released as well. And, once again, when you click on the Manila folder here, you are able to understand why traders care. So export demand and currency demand directly linked because foreigners must buy the domestic currency to pay for the nation's exports, right? So when 70% of when 70% of all of their goods and services that they provide for export goes to the United States, obviously this is something that's going to be impacted. With Donald Trump beating his chest and playing tariff wars with their neighbors and essentially with China, this is something that could impact the market. So let's kind of bring up here something with Canada. CAD, there it is. All right, so let's go to Euro. No, Euro. Let's go something separate from Euro. AUD CAD, right? So there we go. So we have AUD CAD, we have Euro dollar, and we're gonna have in 5 minutes and 40 seconds. We could see a move in the United States, because not really because of unemployment claims, even though it's red. It's a weekly statistic. Right, frequency released weekly, usually on the first Thursday after the week ends. So weekly statistic, not really as impactful as the monthly, and certainly not as impactful as a quarterly. Usually the quarterly statistic is the GDP. Right, Americans did it a little bit differently. The United States divided their one report into 3 factors. They release it every month. It's a preliminary, advanced, and final. And usually the preliminary one is the one that has the most impact. But most other countries, they have it, once a quarter. So it's something that kind of tells if the economy is doing good or not. But check it out. We do have a whole bunch of other revised non-farm productivity, revised unit labor cost, trade balance for United States as well. So if these were not here, because they also might lend a bit of weight to the market, to the value, if, for example, this one is bad, right, it comes out at like 230,000, right? So it's a little bit lower than 240 last month. They say it's going to be a bit lower, and it comes out 230. So technically it is, but it's in the red. If these three have staggeringly good statistics, they can dilute the data. So the market might actually not even move because this being a bit more impressive, but these by themselves will not move the market, maybe noticeably. Maybe you'll see like a 5 pip jump, but it's not like a 40, 50, 60 pip that we're expecting tomorrow with the non-farm, right? So tomorrow, this being the most popular macro statistic of the month, usually it has the most, I don't know, attention. And this is where, tomorrow we're going to, I'm going to be very excited to share this moment with you. We're going to, again, do the countdown. And I get to prove to you that market is not chaos. All right, so we made a little bit of money today with the retracement, even though it was a little bit unusual, so kind of like it didn't really know what the hell to do. But you know what I'm thinking? I'm thinking that this was because of the statement. Okay, let's actually filter this out again, because, I don't know, I don't want to really see it. Actually, maybe let's do just for today, right? Just today. Apply settings, there we go. All right, so just today. So we had, where was it? There we go. Main refinancing rate. You see, this is a statement with carefully chosen words, right? And the important thing is that statistic, right? Refinancing rate statement. There it is. I kind of highlighted the wrong thing. It's a carefully chosen words meant to paint a picture of what the central bank is thinking. So if this, they lowered interest rate, this wasn't really a surprise, right? Because it came out exactly what they said. So if it was higher than 215, like it was like 250, for example, then that would have been a surprise. Believe me, there would have been a much bigger movement and much longer reaction. So there would have been a big spike followed by a retracement, but a big continuation after. So anyways, having said that, maybe there was a bit of confusion. So this technically is not really good for the currency, but maybe they painted a picture in the, so we are able to go to the European Central Bank latest release, the source, right? It's a clickable link, so you can go and kind of take a look at the policy statement as well. So maybe there was a bit of a confusion, and that's what people were reacting. Most of the buying and selling is not done by a person clicking a button like us, right? Rich people have computer programmed already for the particular amount, and as soon as they get the data, it reacts, right? That's why we do the countdown, 5, 4, 3, 2, 1, boom, and it jumps. As soon as it hits 1, it jumps. Today, this was kind of like a bit of, delayed. So there was a spike saying that, oh, yeah, great. But then maybe the statistic came out, and they're like, well, man, no, that's not really good. And so they, so it went down, retraced 200%. Right, so there we go. In about 1 minute and 5 seconds, we should see a reaction for Canadian trade balance, but notice that it is yellow, right? So it's not even orange, it's yellow, which means it's kind of like on the low side. So we're going to take a look at that later, but we have 4. Even if all of them give you kind of like a same statistic, like great or crappy, at the same time, cumulatively, they are going to, they could move the market noticeably, after which point there could be a retracement. So there we go, 30 seconds. See, we got the same kind of time frame right here till the end of the candle. Again, do we know which direction it's going to go? No, we don't. But it doesn't mean really anything because we understand that there should be a retracement. For this, I'm going to risk a little bit less money. Right, so we won on the 50. I don't know if I'm going to see something that I like on this point. That's why we're going to go for 20, 40, and maybe 120. So there we go, 2, 1, and boom! There's a retracement. So as I said, you really, for this kind of thing, it's a weekly statistic. It's not something that's that's so weighty. Yeah, you know what? Yeah, let's go to 40. There we go. Let's open for a retracement there one as well. And I think that I'm going to also do a 150, but we're gonna wait a little bit on that one. All right, so real market, right? We understood where this is going to happen, and something really tells me that I want to open. You know what? I'm going to open it. My balance can allow me for this. Not something that I usually do. This is not something that I like doing because technically, fourth-step martingale now, we have invested 20, 40, and 150. Essentially means that this is like what, 210. So the next one will be $420. But retracement in these, in these situations, comes and it usually comes within the same minute. So we got, a couple of seconds here left to go, and I'm probably going to make money on both of this. Because it does look like it's going to be retracing downward. It's not a weighty statistic. There we go. I'm in the money here. And as long as it doesn't spike up right now above, because it could go spike, retrace, and a continuation. All right, so we'll see. There we go. And it looks like I'm going to be in the money on this time as well. Right? Yeah, so we had pretty good day. That's it. That's it. See, I mean, what do we got? We had $50 win, right? So $44 live. This is what I want to, again, to highlight. This isn't pre-recorded. Click on the link in Pocket Option. Go on the platform right now. You don't need to deposit anything to see this. This is real time in the real market, euro dollar. I've made some money with you today already. So what did we make? I made 132, 167. Well, you know, we made $200 already today just by talking to you for approximately what? We started our stream approximately half an hour ago. I just made $200 in 30 minutes. It feels freaking good. All right. But almost, because obviously I lost 20 here. So in this case, it would be a little bit less, like 180. But nevertheless, we're growing our balance live. I'm not really touching this money because I get my income coming from other sources as well. So it's not something that I need to withdraw immediately. That's why we're going to see it rise. We're going to see it grow over time with these videos. You guys are able to ask me chats. I'm really hoping that somebody will, ask, essentially anything that might be on their mind about the topic at hand, right? About trading. But don't be shy if you want to, I don't know, ask me about, something that I like to do or, whatever. Door is open. Door is open. It's live right now. Or leave a comment. Please subscribe. I'm certainly going to be very thankful. Me and my team are going to be very thankful for that. Okay, so let's kind of dissect what the hell happened. All right, so we've got... Oh, wait a second. Canadian. All right, so I did say Canadian. All right, so this was exactly at 15:30, right? 15:30? Yeah. 3:30 p.m. Canada released certain statistic. There it is. It's this candle right here. And that's what I was saying, that it's technically bigger than the previous ones, but it's not something that you look at the graph and be like, oh, there's something that really happened here, versus when you click on something like this and you be like, oh, hell yeah, this was a fundamental reason why there was movement, so the reason, there was a reason for something, to impact the market like this. There was a reason for market to be impacted like this. Where the hell is that reason? Absolutely correct, in a Forex calendar. Now let's take a look. All right, so we have unemployment. We don't have wait, what the hell? Where are the statistics? All right, so reload the page. Maybe I did. There it is. Okay, so, and look at that. Look at that. It is interesting that we have a worse statistic. Right? Unemployment claims, technically the bigger the number, the worse that is, because it means more people are asking the government for financial aid. In America, I don't know, maybe something changed, but when I was there, you couldn't work and get assistance from the government at the same time, even if your income was very low, which actually prompted people to quit their jobs or do their jobs bad, to get fired, so that they can ask the government for a bigger, for assistance. For example, with medical bills in America, Medicaid. It's a little bit, it's very expensive actually. When I paid medical insurance, I realized there was like 10% of my weekly salary was being, sucked out by this. And, God forbid and I did have a situation where, I needed to be taken to the hospital in an ambulance, which was like 4 miles away, and I paid like $600. It was like when I didn't have medical insurance, and I was like, wow, that's freaking a lot. That's actually it was at that time it was my weekly salary. I worked as a dental technician, and my weekly salary went just for a 4 mile ride in an ambulance, right? So this is where, if you don't have that kind of money, and they say, oh well, you're working, too bad, pay it off the way you like it, but you have to pay it off. Versus, if you can't afford medical insurance, you essentially have to either, because of your income is so low, you might consider, people did consider back then. I don't know if something changed now. I haven't been in America for a while, but you couldn't ask for the government to help you out unless you didn't have income, right? So this means that more people are asking, and this is a weekly statistic, right? So if we click right here, we can actually see. So we had a lowering previous week was also rising, right? So to 240, right? It went from 226 to 240. Right now, it was adjusted from 239 to 247. So it does seem like it's, maybe rising for half a month. Maybe that's a prequel to something, but if more people are asking the government for assistance, it means less people are working, less people are spending salaries. That's why this is so important. Now, the other thing is that, look, it's actually had like a really revised non-farm productivity quarterly, right? It's a quarterly statistic. Measures frequency, yeah, released quarterly about 65 days after the quarter ends. So they revise it. And, well, I don't know. Notes why traders care. Usual effect of actual less than forecast. It's good for the currency. So it was less than forecast, a bigger minus in a percentage. So it was good. All right. So revised unit labor cost. It was a good statistic. Trade balance also went from negative 67 to negative 61 billion. Obviously, a good thing. So, the import-export is being kind of affected here. So that's why we saw euro dollar take well, essentially it was good news because this being a weekly statistics, and even though it's marked in red, it's not as important. Actually, I'm going to show you another report that's usually marked as red, high impact on the currencies, but it's not actually that important. It actually hardly ever moves the market. But these cumulatively, this is actually really good, right? Imagine that your negative trade balance is dropping by, what we got, like 600 million, right? So if this is, or 60 million, no, 600 million. Right? Obviously, in the economy, 600 million is a lot of it. So it's a big number for us, but on the economical scale of United States, might be not really that great. That's why it's marked as yellow, right? So imagine how much money is moved. It's in trillions. So what is 600 million with regards to billions and trillions and stuff like that? So actually, interesting enough. I don't remember where I heard, but people don't really comprehend the difference between, they don't really maybe have the accurate scale of how big a difference is between a million and a billion, right? And this is maybe something kind of like a homework. It's a fun challenge, right? So let's say we can go quantify this to a period of time, right? If you get, how many seconds is, right? So if you divide, $1 million by 60, right? In terms of hours, how many seconds is a million, and how many seconds is a billion? What is the time kind of equivalent of one versus the other? And it's actually staggering. Leave a comment, leave it in the comment below this video, or maybe you can hit this particular, right now in chat, hit us with this statistic. So, if $1 million, let's quantify a dollar for every, I don't know, minute or every second, right? But still, you'd be able to find out how much time that is equivalent to, right? And what is it's same formula, but for $1 billion, right? For a billion, not dollars, but for a billion. A million versus a billion. So it is kind of interesting, fun kind of exercise challenge. All right, so in approximately, what is it, 3:45? Yeah, in 4 minutes, we have ECB press conference. Here's the interesting thing. We did have the European, right? ECB is European Central Bank press conference. So we have a policy statement, which in this case, it carefully chosen words. But here, a head of central bank, perhaps, I think it's Lagarde, right? Or maybe somebody from her office, Christine Lagarde. I think that she's still a ECB president, unless I'm mistaken. If I am mistaken, please correct me and maybe drop a comment in the chat. But it's either her or somebody's going to answer questions from the press. And this is where it could get interesting because it's unscripted, right? If somebody asks her a question, now obviously these people are very well prepared. It's hard to catch them off guard, but it's still possible, which means that if somebody says, hey, and they fire off a left-handed question, I don't know why left-handed, she might not be able to respond in a fashion that would be in tune with the decision that they've made earlier. So this could actually, if they, oh, could you expand? And if she panics and says something goofy, once again, it's not something that usually happens because obviously these people are not newbies. They've been in front of crowds before. They've answered questions before. They understand what kind of questions could be. So they are professional, but theoretically, this could create bigger volatility than this, right? So we had, this, when we didn't, when we didn't see, look, see, when we have contrast to other movements, the graph can shrink or, broaden, but the idea is that this looks massive, but it's only 22 pips. Right, and the other statistic that I said was from a bigger economy, United States. That's why, even though it was a low impact, or on the cumulatively, it created a relatively big impact response. So in about 2 minutes, we're going to see a possible trend. All right, so if she's going to be, answering questions very good, and we might see some bunch of, well, in European, if she answers good, it might be green candles. But at any moment during this time in the real market, she could say something goofy, and whoosh! It doesn't matter the technical analysis. That's actually the important thing. People that are listening to her speech, right, well, that's going to be happening, right, to answer the questions from the press in about less than 2 minutes, they're the ones that are going to be like, oh man, I can't believe she said that, buy, 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 or the other way around, right, sell, sell, sell. So it doesn't matter that parabolic right now is showing up. It doesn't matter that Schaff is saying that a negative trend right there was a reversing, right? It doesn't matter about support and resistance that we can draw, right here. This is kind of like the backseat driver, right? So technically we have an upward trend starting from when we started our, a couple of minutes before this release, we started our stream about here, right? So there was a downward movement. Whoosh, it started to go upwards based on European news and based on American news. Right now it might be touching this point for the 4th time, and it might break through. But even if it does, we understand that, hey, if it breaks through at this point, it's got potential to go to this level, then to this level, then to, maybe this level right here because of the, so we do have other levels of interest that we can establish, but it could smash through all of them because people that are listening to what this woman is saying could interpret her words as something, bad or good. Essentially, we do have possible ascending right-hand triangle right here, right? So it's been meeting this kind of several times at this level, right? So right now it is in effect, right? So it is, yeah, it started right this moment. And essentially, this is what could be moving the market in the real euro dollar in the real market right now. So she's, maybe greeting somebody right now. Hey, thanks for being here. The way she says, the way she talks is also factored in. If she just came on stage and she's like, oh, God, like with the voice that I really don't want to talk to you people right now. Right? So she could be saying things that are usually considered polite and, upbeat in such a fashion where you'd be like, wow, she really doesn't like her job right now because she has to deliver some really bad news. And this could, or, maybe good news. Maybe she's so upbeat, she says, hey, I know we lowered interest rates, but man, you guys have no idea how good it's going to be in the near future. That kind of tone, it's called hawkish, right, with regards to an eagle or a hawk, right? Hawkish tone. When you deliver bad news but with a hawkish tone, it could actually still move the market into the, kind of positive direction. It could move it upwards, right? But if she comes out, there's the opposite of hawkish is dovish, dovish tone. Right, so when, she comes out and she can say, yeah, we raised interest rates, but, well, we'll see if it's, maybe, that's something that, even if you deliver good news, it could be, interpreted bad. And we can see right now something is not good here. And the next move, yes, probably going to drop somewhere up to here or maybe a little bit lower to this level right here. So, but again, I want to encourage people to understand. Last week, you and we've covered technical analysis from perspective of support and resistance levels. We talked about Fibonacci fan, Fibonacci retracement, right? And we understand that, there's some people that are interested in a particular level. So you were like, 90,000, too much to buy a Bitcoin. And then whoosh, it went up to 115. You were like, shit, if it was, 100, or if it was a 90, I would have bought. Somebody that did buy it at 90 is selling at the new high of 115. And when you start selling, people are like, oh, bullish trend is over. Sell, 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 sell. And it goes back down. Supply and demand principles are affected, and it did go back down to 90. And at that point, different people that were like, oh man, 90, I'm going to buy it again. And that's when it jumped up. Actually, I think that we'll be able to, where is it, cryptocurrencies. And Bitcoin is available right now. 15% is kind of low, but nevertheless, this is something that's still available to buy in the, according to the real market quotes. Right, so if we take a look, where was it? It was, 90K. Yeah, now let's say 90,000 right about here, right? All right? Let's say right about here, around $90,000. Somebody wanted to buy, or somebody did buy, and the market went up, and they were like, oh man, I just made 10K. Whoosh! It went back down to 90, 92, right? So somebody said, oh, that's close enough, I'm going to buy. Whoosh, it went up, and then, look, immediately, as soon as it went up to 104, the new high, and it was actually the new highest high, there was not a point before, this is 70, once again, in contrast to the previous, but these were the new highs. Boom, the retracement. Boom, retracement. Boom, retracement. Right, and the volume, we don't have on pocket option volume indicators, but I mean, you can take a look maybe at certain like ADX or Bollinger Bands, kind of get an idea how many people are interested. But this right here, this is a daily chart. We're looking that as soon as it hit, 104, whoosh, it went back down to pretty much 90. And again, a whole bunch of people that were here that wanted to buy because it is a new high, right? Imagine somebody like, oh man, 70, it's a lot of money, but I'm going to buy, whoosh, it went up to 90. They're like, woohoo! So sold. And the other people that are looking at this growth, they're thinking, man, is it, you don't want to enter at the highest point. You want to enter at a lower point. So at this point, when somebody started buying anyways, maybe some affluent people, it went up and they're like, man, 90 was actually a good price. And when it came back down to it, again, they pushed and, the growth from 91 to 90, well, let's say 99 or pretty much, 100K, it's about 8,000. Look how quickly it came back down to, right, in like 4 days. So it took a while, right? It took maybe from like 90, let's say 91 around here. It took a couple of days, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days. Then in 4 days to retrace, and then again it started to go up. And this is probably where daily traders are doing this, right? So it spiked, it retraced, spike, retrace, spike, retrace, spike, 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 whoosh, and then it retraced, very big because it did, or had that big volatility between purchasing and selling, because people are just cashing out. So it depends on what kind of trading you do. So if it's for like a day, for with Bitcoin, you probably could do daily trading, and you probably would want to look at daily chart as well. So if you open a position till the end of the day, not just for an hour, for 2 hours, or for whatever. Right, so if you want to open it for 12, 15 hours, you can do it in binary with a fixed payout. Right, so this is not one for one. That's the beautiful thing about it. You don't have to open up as, buy an actual Bitcoin at 100,000, and then at the end of the day it will be 101, and you cash out your 1,000 profit. You can open a position for like $100, and if it goes, just closes higher at the end of the period, you are going to get not a lot, 15%. So you might get $15 and go to Burger King. That's why majority of people, but this, the general understanding is that Bitcoin is going to be going upwards. All right, so something you need to keep in mind. Right. So, anyways, we took a look at AUD cat. Whoa, what did we miss? What time was this? I'm sorry, that's daily chart. That's why we're, I'm looking at what the hell. It means that somewhere in, is a 3rd of April, there was something that dropped. I'm actually kind of curious. Can we take a look? We are able to take a look at June, May, April. So I don't know. Let's take a look at this. And let's see, 3rd, right? It said 3rd April. Somewhere here. Did we have AUD? All right. What do we had goods trade balance. Right at 3:30. For me, it was 3:30 a.m. So this was, because it's a daily chart. Let's see if we can bring it. All right, man, this is gonna take a while to get to that point, but 3rd of April, yeah, about here, right? So it started to fall very aggressively, and actually, yeah, from the day, but I think it carried over into the 4th. Interesting. So 3rd into the 4th, all right, we did have Australia release negative goods trade balance, and it was actually quite big. Look, it went from 5.1, the forecast was higher, 5.38, but it came out to be significantly lower. This is billions, guys. All right, that's why we're seeing something, so negative. On the 4th, there wasn't anything. So this particular news took the AUD down for quite, right? So AUD CAD, Australia was the first, and essentially, yeah, at some point, let's see. This was at 3rd, right? AUD, this was at 3:30 in the morning for me. All right, let's see if we can kind of get this a little bit. April, okay, no, this is still May. There we go, 13th. There it is. All right, there it is. Right, so somewhere here on the Well, it started to drop second, so third. Oh, grid snap. Alright, let's... Anyways, just out of curiosity for me, so maybe I can help you guys understand. Still, market is not chaos. Market is, and there we go, this week. It happened on this week right here, right? Somewhere here. For April 3rd. Okay, no, this week, there we go. April 3rd at 3:30 in the morning. So about April 3rd, there's 12. Well, I mean, it might not look like it, but maybe, here's the thing. Was something that we also need to kind of be aware of. That's all. We're looking at a statistic for Australia, which is at 3:30 in the morning, according to Cyprus time. Right, GMT plus 3. So in Europe, it's going to be plus or minus 1 or 2 hours. So where is most of the money? Right, so at 3:30 in the morning, the countries with most money are asleep, right? Or it's very, very late. In America, it's super early, or late at 3:30 in the morning. However you want to look at it. It's not where majority of money is. So when somebody wakes up and they see, holy crap, goods trade balance is so negative for AUD, let me sell that. But there's a few hours worth of delay. Notice that this is not a high impact event, but the difference between the numbers was massive. Right? It wasn't a couple of 100,000, it wasn't a couple of million, it was in the billions, right? So this is, pretty damn big, right? We're talking about almost half, right? So 30% plus of the entire trade balance statistic is gone in one is lower in one period of this, right? So this is why that particular drop could be impactful for a long time. So basically, what I'm trying to convey right this second, right now, is that most of the macro statistics that we have, they're usually very fast, pew, and right return. Because majority of people that see this statistic according to this time when I'm speaking to you are awake, and these are the countries on the global scale that have enough money to kind of affect the supply and demand principles very quickly. All right, so a whole bunch of money is pumped into it. Whoosh, a signal. Guys made money. They cash out. It's within 1 minute. Tomorrow's NFP is going to be resolved, or that spike retracement is going to be in the same minute, unless the statistic is so freaking staggeringly good or bad that it could go for a retracement on the following or even on the third minute. That's why what I did today with 20, 40, 150 in one, very short span of time is not a good idea. Right? Because the retracement will happen. Somebody will cash out their profit, but it could be, in the following minute because everybody's jumping on the buying train, right? And pushing the asset up. But as soon as anybody who buys, they'll start making money, when they sell. In profit, right? So this is where retracement will always be there, but we can never really be 100% certain if it's going to be in that same minute or in the following or even in the third. So if we're looking at a 4-step martingale, if you open first 3 in the first minute and the retracement happens on the third minute, you're already committed with like 80% of your balance. All right, because you are going to go in the fourth one, you're going to lose the fourth one, so the fifth one, right, it goes standard martingale with $1 start. It goes 1, 2, 6, 18, 54, right? Just so that he can make like, at that point you'll make some good money, but nevertheless, at that point you just wasted $81. So if you have a $100 balance, you start with 1%. in 5 steps worth of martingale with a multiplier of 2, you're committed to 80% of your entire balance into, this particular movement. Right? That's why we need to understand that even if the statistic that is released is not really high impact, but if the statistic is staggeringly good, right, they might not notice this. They're like, oh, this is medium impact event. I'm not going to wake up for this. All right. But when they woke up and they're like, holy shit, I mean, that's pretty freaking drastic right here. So yeah, I'm going to sell the dollar. And, so when Europeans wake up, Americans are still asleep. So when they wake up and they see the same statistic, they're like, oh man, that's bad. I'm going to sell the AUD. And that's why you saw, wrong mouse. There we go. That's why you saw, let's go back to daily chart. Right, with the AUD, that it's been going down for, quite a few days even though it was released on the 3rd, all right, so somewhere here, on the 3rd, on this candle it was released, but the biggest move happened afterwards, right, because of the time difference. There are, obviously certain sessions that are away, active, while the other side of the world, people are asleep. All right, so let's, God, maybe that's a horrible kind of example, but all right, let's say that it's an active Asian session, right? It closes and Asians go to sleep, right? Europeans wake up, and at that moment, something, I don't know, a volcano in America erupts, the Yellowstone. A whole lot of damage, obviously lots of people hurt, lots of property damage, lots of money that's going to have to be spent. At that moment, Europeans will start selling the dollar. But this particular movement is going to go down significantly longer because when Asian session opens, when Asians wake up, they're going to see, they're going to hear about this news. They're going to go, oh man, that's horrible. They're going to be selling the dollar. So the dollar is going to take a hit over a couple of days, maybe even weeks, depending on what kind of information is being put out by the media. Oh, it's not as big deal, it just rumbled a little bit, we're going to spend, 2-3 billion, everything's going to be fine. Or they're going to be like, holy man, half the United States is affected, power outages, la la la, flights, exports, imports, and be like, oh my god, that's going to be going down forever, right, to recover from something like this. So there is planned news in terms of macro statistics with regards to Forex calendar. But there are also unplanned news that maybe are not on your radar, right? So you don't know what, might be happening. What if the president gets assassinated of some country, God forbid. But that means that for a certain period of time, for a couple of days, the country is going to be leaderless until the vice president steps up and leads the country, right? So you always want somebody behind the wheel of the car. So this is where, might be impacting. But coming back to Forex calendar, there are some events that are not really as crucial to the economy, but, when they're acting within their normal range. Right, so trade balance, it's, maybe it's not, it's marked as a medium impact event. It's not something that's so drastic. If it changes 200 million, couple of million the other way, couple of maybe 100,000 the other way, but when it changes by billions, right, that's something that's noticeable, and that's something that could create a potential drop for a longer period of time. Let me tell you why I'm mentioning this. When Janet Yellen was the ECB the United States, the central bank, the head of the Central Bank of the United States, Janet Yellen, there was a period of time when I had 3 clients, 3 VIPs call me at one after another. And they said, Alex, and they said the same thing. This is why it was so weird. They said, Alex, the indicators are broken, right? Because they're telling me that there's going to be a reversal, but the asset keeps going up. And after the first one, I was like, what asset? And they were like, well, it's euro dollar. I was like, oh, did you know that Janet Yellen just now told everybody that she's going to be increasing interest rates soon. They're like, no, I didn't know that. And essentially, that's such a good news. The fact that she didn't, that didn't happen, but the fact that she said it's going to happen. That's why the euro dollar was going down. And the indicators and, with the shorter time intervals were showing that, hey, it should be going up, it should be going up, but it kept going down for about an hour. With 1 minute expiration, all three of these guys were opening higher and higher positions for a retracement, but the asset kept going down further and further and further because the fundamental news is more important than technical analysis. All right, so we need to understand that planned, unplanned events, right, when we see that, with central bank representative, no matter what country, is going to be giving a speech, we cannot really anticipate unless, unless they kind of hinted at this over time, but they could say something surprising, and the market could go for a trending move for a very long time. Then that's why at that point you might not really want to be the one doing technical analysis on the real market because it's not going to be accurate. However, when we're talking about the OTC, in this case, this is not really affected by the fundamental principles on any level, and this is why it's something that is preferred to people that just wake up without brushing their teeth, without watching the news. They just wake up, they sit in front of a computer, and they're like, oh, let's take a look at what the charts are doing. Here they are. Okay, you support, resistance. Oh, there's a trend. There's this. There's that, and they're able to take advantage of something like this. All right, now wait a second. I think that at some point I erased the support and resistance levels here, but we do have, kind of support and nice support and resistance levels going. Wait a second. I have technical analysis, but I don't see where. Obviously not. No, yeah, May. Oh, not in 2023. What the hell? Euro dollar to where's my technical analysis here? There they are. All right, there they are. They're all over here. Wait 1 second. Let's take a look at an hourly chart. What did I draw here for you guys? Probably there was the head and shoulders pattern, and I think that was on the that might be visible on the 5-minute chart. Whereas it was last week, right? Last week there was this amazing head and shoulder pattern, and I showed it to you guys, and I explained where it's gonna go, why, right, the head and shoulders pattern after it breaks through. This was with 1 minute chart. Was on the 29th of May, and I said that it's going to go probably as high as the previous high, and certainly it did, right? So it went, this is where it reached. It reached that point over time. Right, so it didn't go in one candle, but it did go higher, higher, higher. It kind of retraced even here, but then it reached the point. So this is where Forex traders would be very excited to see such a clean support and resistance levels, essentially. Yeah, but this particular pattern on the 29th, right, a couple of days back, still with 1 minute candles, you kind of have to scroll back a lot, actually, right? But nevertheless, I mean, just kind of take a look at this gorgeous pattern, because these are probably as good as they come, right? We got a whole bunch of Forex in the previous day. We have a whole bunch of Forex patterns with flags and pennants and whatnots. There it is, right? And this is something that, stimulates us, the technical analysis traders, to maybe ride that train, ride that pony all the way to the end. All right, so let's see. What do we got? We got an hour worth of chatting. My dear friends, I mean, I always encourage you guys to be a bit more active in the chat. You're not going to get the answers unless you, kind of ask the question to see, maybe what's on your mind. But we were talking about fundamental analysis this week. As I mentioned, you could kind of take a look at all of the events. It's super rare that maybe these super low impact events will move the market, but just as we saw an example right now, yes, they do if the statistic is drastic enough. So today, we've made money with you. I've made money on the main refinancing rate with the euro. We've made a bit of money 15 minutes later with unemployment claims and these three minor impacting events, but cumulatively they were actually big enough, right? So it was negative 67 billion. Now it's negative 61. So we're talking about like $6+ billion or $6 billion worth of improvement. That's pretty damn good. All right. So even though it's marked not as high, maybe sometimes it's worth keeping an eye out on these statistics as well. At 3:45, we got ECB press conference, and actually, how is it going, by the way? Let's take a look. Right, so, yeah, man, it didn't do good at all. Right, I said that if it's going to go down, it's going to go down to possible levels of interest. So probably around here, maybe, around here. And you can see that it did retrace a little bit at this point, went back low, or went not much lower, retraced again. So, and I mentioned that maybe somewhere around here because it was the point that it bounced several times, once, kind of close enough, 2, 3, 4. It kind of breached that a little bit lower, but, that's it. I think the press conference is over already. So maybe leaving on a good note, euro dollar started to go back up and it established a new high over the course of like 5 hours, right? Which we were looking at 1 minute candles, but we're looking at about 5 hours worth of data. So it established a new high because of the refinancing rate. It established a new high because United States, the unemployment statistic wasn't really so hot. So there was a spike, followed by a bit of a retracement. Right about here, we have the 345. This support level was breached by Lagarde, perhaps Christine Lagarde speaking or somebody on her behalf. It wasn't really going all that good, but maybe leaving on a good note. They started moving the market back up. So the tone, all of this is important. This is all that you can take a look at in the European Central Bank site. So if you have access to that, go ahead, take a look and see the recorded speech. Maybe on YouTube right now, you could already see, if not live, a recorded session of what she was saying or what that person was saying. So we have at 5 o'clock, we have, actually, wait a second, did we miss it? No, we're not going to miss it because, that's actually in about 45 minutes from now. So we're going to have Canadian IV PMI. Now, I'm actually kind of curious what the hell is IV. So Richard Ivey School of Business, right? So a particular institution, a school that maybe discusses and teaches business on some level is going to put out a statistic, right? So it's released monthly about 5 days after month's end. So usually on the 5th, today, right? Today being the 5th. Yeah. Right, so notes, above 50 indicates industry expansion, below indicates contraction. So they're saying that it's rising, but it's still not above 50, right? So we kind of need to keep that in mind. Sources changed series from non-seasonally adjusted to seasonally adjusted of March 2011. So maybe they were excluding farming industry, but after non-seasonally adjusted to seasonally adjusted. So they do include, as of March 2011, they include farming sector as well, but this is for Canada. So I don't know what kind of grain, what kind of farming is done in Canada. Right, so why traders care? It's a leading indicator of economic health. Yes, obviously, if the diffusion index based on surveyed purchasing managers, right? So PMIs, right? Purchasing Managers Index, PMI. Yeah, I guess, I mean, this is something that could, it's a medium impact event. So we could see a reaction with a real market Canadian currency pair. All right, and tomorrow, this is something that's, actually, wait a second. Today, do we have anything, natural gas storage? I don't know. FOMC member Kugler will speak. This is one of the 12 members, I believe, that compose the Federal Open Market Committee, right? And one of them is going to be making a speech. So more hawkish than expected is good for the currency. As I mentioned, if a person is very confident in what they say, how he presents himself, this is something that might move the market, even though it's not high impact. He's not the head of the FOMC. That's, from what I still believe, it's still Jerome Powell. But here's the interesting thing. Jerome Powell is the head of this organization. He's the one that usually says, we're going to raise interest rates, right? Or lower interest rates. But during these kind of speeches, one of these members could say something just to see how the market would react. All right, so he could say this particular what's his name? Kugler, right? So Kugler, and then there's going to be Harker, then there's going to be Schmidt. So a whole bunch of these guys are going to make statements, they're going to make speeches, and they could test the market, right? So Kugler could say, hey, we're, very confident that there's going to be interest rate hike in matter of like a month. So they have some time from 7 p.m. GMT plus 3 time, right, till 8:30 until somebody else, right, the Schmidt or Harker could say something otherwise. But this 1 hour, they would see, how people are reacting to this. Are they very positive, or is there kind of like, whoa, 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 what do you mean you're going to be raising interest rates? Maybe there's going to be a negative reaction, even though it's good news. So the guys that are, these particular people, the part of the FOMC, they could be testing the market. They could be testing and seeing how people would react, how drastic, how fast reaction, what is the price action on this, how quickly it could, go from, change directions, or how people are reacting. So there's that. So today, I don't really expect a lot of, maybe there could be like a short-term move, trending move in the real market. But, I don't know if you guys, the reason why I'm mentioning all of this is that, remember that, me, as your mentor, I'm not selling you a trick. I'm not selling you a strategy, all right? I'm presenting you with full information that would give you an ability to trade the way you feel comfortable, right? So I don't feel comfortable trading trending moves in binary options in the real market. However, today I shown you several macro statistics. We traded them, at the same, as they were unfolding. We've made some money. I'm kind of happy with this, but as I want to always remind you, in the real market, it's the fundamental analysis that's behind the wheel of the graph, right? So I can't tell you that, hey, right, 1, 2, 3 point contact that broke through, there's parabolic, I don't know, CCI was lower than 50 here, so pointing downward. Shaft made a sharp retracement, right? And I couldn't have told you that at this point it didn't really start going up the way it did right now. Because why was it going down? Because at this point, the representative of the central bank was speaking, and they were probably drawing this down. The fact that it kind of fell into the technical analysis as well is not guaranteed, right? So we see 1, 2, we got 3, there's on the 4th point, it dropped, it broke out, Shaft said, hey, go ahead, buy, parabolic said buy, fractal said buy, and you know what, yeah, I mean, you could have ridden this train, right? But I know of some traders that prefer to wait for the fundamental reason to stop being the, I don't know, the impactful, aspect, in the market movement. All right. So can we say that this was because of technical analysis? Not really. Because we could, I didn't hear the speech. I didn't hear the questions. But if I was looking, yeah, at that point I would have been more interested. If this was euro dollar OTC, absolutely. Absolutely. Because there's no fundamental reason. Because in the OTC, in the technically dominant, right, there's no fundamental spikes, right? Let's take a look. So we remember that this was the interest rate decision. This one right here at 3:30 was the unemployment claims. All right, so this was at 15:15, no big spike. 15:30, no big spike. So here again, we saw there's a support level right here. There, it was broken through right here. Fantastic. Take a whole bunch of positions and you would have made money. Actually, though, I do say that our approach for the winning of tournament yesterday would have seen a serious test of. Oh wow, look at that. Here it says sell. You would have lost, lost. But here it says buy, and it was green. So we're seeing actually, see, there we go, a very rare occurrence. 1, 2, 3, 4, 5, 6 steps you would have lost in a row. So this is where in the real market, or I'm sorry, in the real account, right? In the tournament, I say that this kind of situation happens super rare. But that's why in the tournament, that kind of risk is acceptable because it's free of risk. It's not your money. All right. So even if you rebuy, you will waste, you will not waste, you will risk a very small amount, like $1 in those tournaments. Right? You get $100 balance, but you're actually risking $1. If you win, you win, I don't know, 20, 30, 50, 75, 125. So you win some good money. But, that's actually one of the things that you could consider as part-time income as well. You got $50, you got 50 chances to win a third place position at least and get your money back. Right? You can trade very aggressively. It doesn't go through, screw it. You waste another dollar. You trade very aggressively. You get yourself on the top, positions. You get a whole bunch of money, 20, 30, 40, whatever, $125. You might actually be in profit right there just like that by risking very little. But if you're trading as an active income in real account, this is where I would always caution restraint and going beyond the third step martingale. It's probably not wise. But I'm not telling you what to do. If you calculate your statistic like I shown you like yesterday or the day before that with the tables, if you realize that 85% success rate is in the first 4, right? If it's in the first 3, don't go into the 4th one. You don't need 95, 98% success rate. If you got like 80, that's plenty of opportunities to make money, serious money, or long term. Because going to the 4th step martingale is actually, increases the risk like significantly. If you lose the 4th step, you're probably going to take the 5th one already. And if you take the 5th one, you're probably liable to go all in. And that's where it's not something that's good because we see certain situations where the market could give you like 6, 7 false signals in a row. But we are talking about one indicator. There was no confirmation. Here was we got Schaff showing a buy, right? But this was actually here. So we were talking about from this point. This one says sell, 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 sell. Here it's it went red, but this one said red, but you bought, right? And this one closed lower, you bought. So this was actually 6 losing trades in a row. Only on the 7th one you would have been in the money. Right? So giving you the dose of truth. The approach that you and I did yesterday, never really gave us an opportunity, this kind of scenario where we would have had six, seven losing trade, losing trades in a row. We usually win, right? And if we followed here, sell, lost, sell, you would have been in the money because technically it did close lower. But even if you kind of screwed it up here, in the money. First, second step martingale, in the money, in the money, in the money, in the money. Second step, in the money. Second step, in the money. Second step, in the money. Here, lost, but on this one, you already switched, so, higher, in the money, in the money, in the money. Four, on the fourth step martingale, in the money, on the second, so for quite a long time, for this, like, maybe an hour worth of time of trading, you should have been in the money all this time. And in the tournament, you could take it to the sixth step. Just follow through with the signals. Yes, it might not work today, but you know what? Tomorrow it might go through. Yes, it might not go through till, the following day, but once again, we're coming back to the fact that the tournament is free. Click on our pocket option link below. Make like a, I don't know, whatever, symbolic deposit, and the tournaments will become available to you. Verify the account, make a deposit like 10, 20, whatever, 20, 40 bucks, 50, whatever it is, and test all of the things that I say in the demo account. That's a beautiful thing, though the demo account has one, negative thing. You can't believe how many times I've actually talked to people and they say, Alex, I'm making money. I'm making money in the demo account, like hand over fist. As soon as I transfer over to the real account, I'm losing money. Well, I usually tell them, hey, bud, you know what? The graph is identical, right? You go to demo account, euro dollar OTC with 1 minute candles, and you open a real account with euro dollar OTC with 1 minute candles. The graph is identical to each other. They don't change. All right, so that means that the way you trade is different. So in the demo account, you don't really care. You don't care about your losses because it doesn't affect you. And obviously you don't care really about the wins. It's very hard to trade in the demo account as if you care. As if it's your real money. They give you 1,000 or 10,000 balance. You can top it up yourself to any amount that you wish, right? So this is why there's not enough emotional attachment to this particular way of trading. However, in the tournament, it's kind of like a sweet middle ground. Demo account, you don't care. Real account, it's actually something that is nail-biting experience. Tournaments are somewhere in the middle because you're not risking your money, but the profit is real. The profit is real. The money that you're going to get in your balance, the money that you'll be able to withdraw right away is something that's real. So in the tournament, you do have emotional attachment to the way that you trade, but without the risk. So tell your friends, right? Maybe you guys can do it together. Click on the pocket option link below. Verify your account. It's something that's very easy. Make a symbolic deposit. You don't have to trade with it right away. Test the things that I discuss. Test the things that me and my team put out there. Reach out through Telegram to the Telegram channel to talk to me directly, just like Donald and Henry did. Let's clarify any questions that you have one-on-one, right? You're not going to talk to annoying chat bot. You're going to talk to me, all right? I'm going to clarify any of the questions without the trust me factor. I'll explain to you specifically, step by step, why the theory and you and I can actually trade together, and I can show it to you work in action, or kind of in practice, right? Not just in theory, but in practice, just like I'm doing in the streams right now. I'm not just saying, oh, there's going to be a reaction, there should be a retracement. We open trades with it. We open very specific amount of trades. I'm not chasing billions of dollars, even though yesterday when we made 40% from the daily balance, imagine $1,000 becomes 20 million. $20 million plus in a 1 month if you make 40% per day. Ridiculous thing. It's actually not something that I would ever encourage, because yesterday's trading we've done in the tournament account, not in the real account, and I would be trading very different in the real account than I do in tournament. Anyways, right now, my dear friends, we're still not seeing any kind of activity in the chats, other than from my two guys who are here absolutely every day. Love you, Henry. Love you, Donald. Thank you for I don't know, being on the radar. I don't know if you guys are drinking a cup of coffee and listening, or I don't know, just doing something else. But anyways, once again, my dear friends, I've shown you that this is possible. I'm going to keep showing you, and I'm going to keep making money with anybody who wants to. So subscribe, leave a comment if you're watching this video later. I will answer absolutely every single one of them. All right, and I'll see you tomorrow with the most popular statistic of the month, the NFP. We're going to try to do the pending orders tomorrow as well, so that we can take advantage of the spike and the retracement that should usually comes afterwards.